Dear students, today I will discuss a very important topic, stock index. Quite often you heard NIFTY and SENSEX. Sometimes NIFTY is up or down, SENSEX is up or down. There is so much talk about NIFTY and SENSEX in business channels, in newspapers, and it is very important aspect of a stock exchange. As we know, a stock exchange is called barometer of the country or barometer of an economic performance of the country. So today I have planned to throw light on the stock index. What is a stock index like NIFTY and SENSEX? What does it signify? Why these stock indexes are important? And what a layman should know about the stock exchange indexes? And how these are useful for economy and how we say these are barometer of the country or economic performance and how these stock indexes are compiled. So all these things I will discuss in this video. So I request all of you to listen it carefully. I will share my screen to make things clear to all of you. Today's topic is stock market indices, SENSEX and NIFTY. SENSEX is an index which is representing Bombay Stock Exchange, and NIFTY is a stock index which is representing performance of National Stock Exchange of India. And stock exchanges are called barometer of economic performance of the country. Why do we call it barometer? It is just like an instrument, like barometer is an instrument which is used to measure the atmospheric pressure of the earth. Similarly, Sensex and Nifty, with the help of these two, stock exchanges display or reflect economic performance of the country. So in this video, I'm supposed to discuss in detail what is Sensex, what is Nifty, and why these two are important, and how these are compiled or constructed. Construction is based on index number, why these are useful for everyone to understand. I'm supposed to discuss in this video, so listen till the end of this video. Before that, you need to understand we have financial market, we have a structure of financial market. In order to strengthen the financial market, we have two regulators. One is Reserve Bank of India, which is regulating money market, and another one is Securities Exchange Board of India, SEBI, which is regulating capital market of the country. When we talk about market, market means buyers and sellers. When we talk about financial market, it means it is a market of have and have nots. Those have surplus finance would like to invest somewhere, and those are in need of finance would like to raise finance. And how it is possible? So financial market is a platform where those people or those have surplus fund would like to invest, and those are in need of fund would like to take the fund from the investors. So financial market is broadly categorized into money market and capital market. Money market deals with short-term sources of finance. If anyone is interested to invest, or if anyone is in need of short-term fund, would go for money market. And if anyone is interested for long-term finance, long-term fund, they have to rely on capital market. And money market is in organized form with the help of these instruments like treasury bills, call money, certificate of deposits, commercial papers, provident fund, bank deposits. With these instruments, someone can invest, and another one who is issuing these certificates may raise the money. We have unorganized market also. Similarly, we have capital market. If anyone is in need of long-term fund for doing business, may issue securities in primary market, may issue securities. Normally, corporations are issuing securities in primary market, and first-hand securities are issued to investors. Investors may be anyone, individual, maybe a firm, maybe a corporation, maybe foreign institutional investors. It may be anyone. So whosoever is buying and selling fresh securities which are issued by the company, it will be categorized into primary market. So initial public offering, as you might have heard, when first time a company issuing shares or securities to general public, that is called initial public offering. And once public or investors have purchased securities, the fund is blocked for a certain period of time. If it is equity share, then equity share is called perpetual capital. Your fund is blocked perpetually. It is up to the policy of the company. So how to get fund if somebody has invested in equity shares? So there is a secondary market where liquidity is provided. Secondary market is called a stock market. So stock market is a place where already issued securities are bought and sold. These securities may be equity and debt. And further coming to capital market structure in India, capital is one of the basic requirement for industrial development. For doing any kind of business, capital is required, and capital is the amount which is required to start the business or to expand business activities or to diversify business activities. So we have to facilitate capital. We have capital market structure in the country, and we have market for government securities. We call gilt edge market. Gilt edge market is the market for government securities. If government is in need of fund, may issue debenture, may issue bonds, may issue some more securities, and whosoever has surplus money may invest, may buy government securities. We have industrial securities market. A lot of corporations are there who are in need of fund. Sometimes you have seen Reliance Industry Limited has issued shares for expansion of its business. So anyone may issue, anyone may buy shares of those corporations. When first time shares are issued to general public, it will be in the new issue market. It will be new issue market, and that is through IPO. And once shares are purchased, they can be resold in the secondary market, and secondary market is called stock market. And we have many development financial institutions, and these development financial institutions are made for promotion of industrial development in the country. And you will find plenty of financial institutions which have been established by Government of India after independence. The first financial institution of the country is Industrial Financial Corporation of India, and then IFCI, SFCs, Industrial Development Bank of India, UTI, SIDBI, and there are many more financial institutions like NABARD, Exim Bank. And we have financial intermediaries. These are link between have and have nots. Financial intermediaries also play a very important role in the capital market structure. They are the facilitator. They are the link between investors and companies who are in need of fund. These may be merchant bankers, mutual fund, leasing companies, venture capital companies, and other financial organizations like broking firms, NBFCs, to which we call finance companies. So these financial intermediaries also play a very important role in the capital market structure or capital market system in the country. Now we have secondary market, and secondary market means the stock market. The oldest stock exchange of the country is Bombay Stock Exchange. It was established in 1875, and this is one of the oldest stock exchange of Asia. And this is the building which is situated in Mumbai. Apart from this, we have like on Dalal Street, we have the Bombay Stock Exchange is situated at Dalal Street. Apart from this, we have National Stock Exchange. Actually, National Stock Exchange came into existence after economic liberalization of 1991. And there's a logic for establishment of National Stock Exchange. In 1991, Indian economy was opened. Foreign companies were invited. Foreign investment was also invited. Foreign institutional investors were also invited to make investment in the stock exchanges. And that time, all the stock exchanges in the country were regional stock exchange. Like Bombay Stock Exchange was catering to a particular region, that is Maharashtra. Kolkata Stock Exchange was catering to West Bengal. Madras Stock Exchange was catering to Tamil Nadu. Bangalore Stock Exchange, likewise. Chandigarh Stock Exchange, Bhopal Stock Exchange, Patna Stock Exchange, Kanpur Stock Exchange. All these stock exchanges were meant to cater industries to facilitate industries of a particular region. When after economic liberalization, outside investors were invited, and we said, come and make investment in India, then foreign institutional investors faced the problem, and we realized we need to have a stock exchange which is truly representing India. So in 1994, National Stock Exchange was established, and in 1992, SEBI was made an apex institution to regulate and to control the entire capital market system of the country. So NSE is truly representing India, but Bombay Stock Exchange is oldest and largest, and that's why it is equally popular. The size of the business or the transactions happening at Bombay Stock Exchange are quite large, and outside India, people consider Bombay Stock Exchange representing India, but technically NSE, National Stock Exchange, is representing India. But both are equally good, and in terms of size of business are equal, and that's why these two are important. This is the night view of the building of National Stock Exchange of India, Mumbai. Now coming to main topic, stock index. In India, two popular indices are SENSEX and NIFTY. SENSEX stands for Sensitivity Index. NIFTY stands for National Index of 50. If you see the value of SENSEX, you will find at every point of time, you will find different value of SENSEX and NIFTY keeps on changing. Even this chart is showing how SENSEX has traveled. On 6 March 2020, SENSEX was 37,576.62. On the same date, NIFTY was 10,989.45. And today, 7th April, SENSEX is around 28,000 and NIFTY is around 8,400 something. These points you may consider, if these points are going up, you may think at this point of time that economic activities of the country are in progress mode. And if these points are on decline, like you can say, on 6 March 2020, SENSEX was 36,576 and today it is around 28,000 something. So meantime, in last 1 and 2 months, in 1 month you can say economic activities have declined due to effect of COVID-19 coronavirus, due to lockout and closure of the industries, and most of the industries are closed. They are not able to perform, and that's why economic activities are on decline. You can see on 1st April 2019, Sensex was 38,871. And on the same date, 1st April 2020, Sensex came down to 28,265. So approximately 25%, approximately 25, or it is given, if you see at the bottom of the slide, 27.29% decline in the Sensex points. It means economic activities have declined by 27.29% during 1 year if you compare 1st April 2019 to 1st April 2020. So during this period, 27.29% Sensex has declined, which is representing to the same extent economic activities or where size of the business or business activities have declined. And you see the value of Sensex on 3rd April at 3:40 p.m. 3rd April 2020. And this chart is showing how Sensex has traveled during last 1 year. And if you say before February, probably in January, value of Sensex was more than 40,000. And the benchmark, how the journey of Sensex has started. In 1986, Sensex was formed with the base year 1978-79. So 78-79 value of Sensex was 100. So from 100 to more than 40,000 during January 2020, and currently it is around 28,000. So still you can say from 1978 100 and today it is around 28,000. So 280 times, from 100 to 28,000, 280 times size of the business or size of the economic activities have grown during this period. And that's why we call stock index as representative of economic activity or reflecting economic performance of the country. Now, this slide will show you how Indian economy or how economy is classified into different sectors. So worldwide, these classifications are made for economy. When we talk about economy, like if you ask a question to any student, what is economy? Not economics. Economics is defined by different experts, like Adam Smith has defined. Economics is a science of wealth. Marshall has defined economics is a science which deals with social welfare, and there is a scarcity definition of economics, growth and development by. So we have number of definitions, but when we talk about what is economy, economy refers to aggregate economic activities of the country. When we talk about economy, it means it is the aggregate or sum of all the economic activities of a country, and it is reflected by a stock exchange which is called barometer. So with the help of NIFTY and SENSEX points, stock exchanges reflect economic performance of the country. So economy refers to aggregate of all economic activities, and what activities are broadly categorized into two parts. One is called economic activity, any activity which is undertaken with the objective of earning profit, and non-economic activity, any activity which is undertaking not for earning profit, that is non-economic activity. So all these economic activities are categorized into different sectors on the basis of nature of job, primary sector, secondary sector, tertiary sector, on the basis of working condition, organized, unorganized, on the basis of ownership, private sector, public sector. So coming to how I will in this slide, you can see how Indian economy is divided into three important sectors. Primary sector, which includes economic activities which are related to agriculture. Secondary sector, which includes economic activities related to manufacturing activities of the country. And tertiary sector includes service-oriented economic activities of the country. So in primary sector, we include all the economic activities which are related to agriculture, farming, mining, forestry, grazing, hunting, fishing, quarrying, or any other activity which is related with natural resources. So these are some of the pictures showing economic activities of primary sector. All these pictures are representing the same. Now we have secondary sector, second important, and the contribution of primary sector in the GDP or national income of an economy is approximately 18%, and contribution of secondary sector is approximately 22 or 23%. So secondary sector includes all the economic activities which are related to manufacturing process, which are concerned with manufacturing of physical product. So all these pictures are showing some physical products are being produced, and it is economic activity. These pictures are showing economic activities of secondary sector or manufacturing sector. And these are different industries. These are different industries on the basis of size. We have a small scale industry, medium, large scale, tiny industry, micro industry. We, on the basis of agro based, we have sugar industry, cotton textile industry, coffee, tea, rubber, etc. On the basis of like mineral based, we may classify some of the industries. On chemical based, we have petrochemical, plastic, synthetic, fiber, different industries. Forest based, we have animal based. On the basis of output, basic industries like iron, steel, aluminum, consumer goods industries. On the basis of size also, we have these industries. So industries are classified. This chart is showing various types of industries, and whatever being produced by these industries will contribute to income of the economy, and its contribution is approximately 22 to 23%. Third important sector of Indian economy where economic activities are being performed is service sector or tertiary sector, where activities are performed and product is intangible in nature. You cannot see, you cannot touch, but you can feel. These important industries are IT industry, education industry, transport industry, hospitality, hotels, tourism, medical, factoring services, forex services, consultancy, engineering, legal services. These are some of the services forming part of tertiary sector. Now this chart is very important to understand how to know the economic performance of a country. Economic performance of anyone is determined or decided on the basis of income. If somebody is earning high income, will be richer. If somebody has low income, will be poor. So during final product, during 1 year, all the final goods and services produced by these three important sector and its market price. So market price of all final goods and services produced by primary sector, secondary sector, and tertiary sector during 1 year is called national income or GDP of the country. And India's GDP will be in terms of rupees when we transform into market price. Whatever we produce from these three important sectors, its market price will be in terms of rupees. And how to compare India is performing better than China or better than USA or not, or better than other countries. So we can make comparison, and comparison will be possible when GDP of all the economies of the world are converted into some common currency, that is dollar, because GDP of different countries will be in their respective currencies. So when we transform GDP of different economies of the world in terms of dollar, you will come to know who is producing how much value of, or who is contributing how much income in the total income of the world. So China's contribution is 18.58%, United States of America is producing 15%, and India's contribution is 7.69%. And rest of the, like in this chart, contribution of different economies, important economies you can see. And this was the forecast of the GDP in terms of purchasing power parity by IMF World Economic Outlook in October 2019 to 2018, and it was a forecast for 2019 for G20 nations. And this data analysis was done by MGM Research. So China's GDP was considered to be or estimated to be 26% of one. It means approximately 26% income China is contributing in the, if you see the global income, total income of the world, then 26%. It means 26% of goods and services value are produced by China, 20.4% by USA, and 10.8% by India. So this is the contribution of G20 countries in the global income. In the previous table you have seen, India's GDP was ranked third. It was third in the list, followed by China and USA. After China and USA, India was ranked third. But India is not the third richest economy of the world. The reason being its population. Whenever total income is divided by population, you will get per capita income. So per capita income is the symbol of wealth, symbol of richness of the country. So total income is divided by its population of the country. You will get per capita income. So it was done during 2018. Again, this calculation was done by IMF World Bank World Economic Outlook in April 2019. It was published, and this data analysis was done by MGM Research. So Luxembourg was the richest economy in terms of per capita income. 1,14,234 US dollar was the average income of one person of Luxembourg, followed by Switzerland and then many other countries. So this table is showing per capita income of 66 countries of the world, and India is not included in this 60. It means India is not among top 66 richest economies of the world when we determine in terms of per capita income, when we want to say in terms of per capita income or average income of one person. Now coming to NIFTY and SENSEX. NIFTY comprises of 50 stocks initiated It is an index of National Stock Exchange, and base year is 1995, and that time value of Nifty was 1000, and today it is around 8000 something. And you can see the journey of Nifty 50, 1000 point in 1995, and in July 2017 Nifty touched 10,000 point. It means as compared to 1995, in 2017, in the span of 22 years, the size of the business have gone up 10 times in India, and today it is 8000 something. To some extent, the size of the business has declined due to poor performance, due to lockdown in the country, or due to impact of coronavirus COVID-19. And at different point of times, due to performance of the companies, we can say these are the top 10 companies of India on the basis of market capitalization. Market capitalization means number of shares outstanding into market price of the share. Market price of the share may go up and may go down, and accordingly market capitalization will fluctuate, and accordingly size of the business will be ascertained, and you may decide which one is the largest organization in the country or in the world. That is decided on the basis of market capitalization. I have seen sometimes TCS was number one, sometimes ONGC was number one, but at different point of time you can check which company is the largest company in terms of market capitalization. But at certain point of time, these were the top 10 companies of India: Reliance, TCS, HDFC Bank, ITC, SBI, HUL, SDFC Limited, Maruti, ONGC, and Infosys. And apart from this, from investment point of view, suppose Nifty has shown 3.15% upward trend. It means Indian economy has performed by 3.15%. But during same scenario, if you see the performance of IT, all the IT companies which are listed at National Stock Exchange, its performance was 23.78. Overall economy has given upward trend by 3.15%. During same period, 3.5% is weighted average performance of all the companies listed at National Stock Exchange. During same period, FMCG, that is fast moving consumable goods, has performed by 13.65%. Financial services, and you can see red figures, these companies have not performed, they have performed negatively, but weighted average was 3.15%. At Bombay Stock Exchange, if you go to Bombay at Dalal Street, you can see people are standing and watching the share prices which are represented by arrow upward and downward as compared to last day closing price, so on daily basis. Now sometimes in the news you have seen SENSEX is up or SENSEX is down. At one point of time it was a news that Nifty crashed by 490 points. So what does it mean? Why it is important? These points were crashed. It means market capitalization of the companies was down. And why it was down? Market price was crashed. Why it was crashed? People were not optimistic about future performance, and that's why they started they started selling the shares. For example, if you come to know India, if you come to know Indian economy will not perform better in future, so you would like to withdraw the investment. As a result, market price crashed. So after crashing of 490 points, you know how much investors lost? 7 lakh crore. So likewise, on daily basis, and if you watch business channels, you will come to know if Sensex is up or Nifty is up, how much is the aggregate benefit of the investors and how much is the aggregate loss to investors. Sometimes you may find such kind of scene or scenario. These are these are terminal operators working at some broking firms. If any investor is willing to buy or sell, they place an order, they give call to terminal operator at broking firm, and they ask the price, whether they are interested in buying and selling. So these people will facilitate in buying and selling of stocks in the market. Sometimes they feel happy if market is doing well, they can show their face to investors. Sometimes they give advice, consultancy to investors if market is doing well, but sometimes they advise to investors, and investors are loser because market is not performing well, so they are also desperate, they don't feel happy. Sometimes there's a question in their mind what to do. Lot of advices I have, lot of advice we gave to investors, what will happen. These pictures you can see how people are concerned with the performance of a stock index. If market is doing well, they will feel happy. If it is not doing well, their investment is there, and that's why their finance is at stake. They may lose money. Sometimes people learn. They are standing and they are talking and discussing about the market. So, and same case with Warren Buffett. He used to deliver newspapers door to door, and he used to stand at New York Stock Exchange on roadside, and discussion was going on. So in that way, he learned and became one of the largest investor of the world, and he proved with the knowledge and wisdom of the market, money can be minted, money can be made. So in 2007, he was declared one of the richest person of the world, defeating Bill Gates. And his business and his profession is financial consultancy. So even a financial consultant can become the richest person. It's an example of knowledge is power. Some more pictures you can see. On the basis of market capitalization means value of business, size of the business. New York Stock Exchange, Nasdaq, London, Tokyo Stock Exchange, Shanghai. These are some of the top stock exchanges of the world. And every major stock exchange is having index, just like Bombay Stock Exchange having index called SENSEX, National Stock Exchange having index called NIFTY. Similarly, Dow Jones is an index of New York Stock Exchange. Nasdaq is an index of small and medium-sized companies of USA. Russell, FTSE is from London. DAX is from Germany. CAC 40 is from France. Straits Times Singapore. Hang Seng Hong Kong. Nikkei is also there. Kospi is from Korea. So like this, you will find major indexes, and international comparison can also be made. It's an old picture just to make you understand. Since January 2000 to January 2012, the journey of major stock indexes of the world. Take the example BSE Sensex. In terms of profitability, Bombay Stock Exchange means companies listed at Bombay Stock Exchange gave highest return to investors globally if you compare. The next best was Shanghai Composite of China, Hang Seng, S&P 50, FTSE, CAC, Nikkei. So from 2000 to January 2012, if you see the overall performance of economic activities, so in terms of growth, you can see in terms of performance, BSE is showing better performance than other emerging or major economies of the world. Again, this figure you can see, due to coronavirus, Dow Jones, Nikkei, Kospi, S&P 200, right from January to March and April, you can see the overall economic activities are on decline. There's a lockout in most of the countries. In some of the countries, there is curfew. In some of the countries, relaxation is a bit, but most of the industries are affected. Most of the economic activities are affected, and that's why these indexes are showing southward or downward. Now I will discuss how SENSEX or NIFTY or a stock index is calculated. I would like to recall you the subject statistics. You have studied index number. In statistics, index number is taught. Index number is a number which shows relative price change. Two prices are compared from two different dates, and on the basis of that you will get index number which is represented in terms of 100. Suppose price of petrol in 2000 was rupees 40, so that will be P0, and price of petrol during 2020, suppose 74, so that will be P1. So 74 upon 40 into 100. So answer will be somewhat like 100 something, less than 200, or approximately 180 or 90. So it means as compared to 2000, price of petrol has gone up by 80%. If it is 80, 180, so it means 80% price of petrol has gone up in India. Similarly, share price. When you want to calculate SENSEX, just like these are the items, but you consider these items are 30 companies of SENSEX and their price on a particular day and today's price, then index number can be calculated. As compared to 2005 and 2006, price have gone up by 35.19%. So if it is the case of stocks, then it means the stock market has given 35% return to investors. It means, or 35% growth has given the market, the business during this period has gone up by 35%. So on a particular day, we take share price, number of shares, and the market value. Share price into number of shares. If you multiply, it will be market price, market capitalization. And share price keeps on moving depending upon demand and supply. If company is doing well, investors would like to buy it. As a result, share price will go up. If you think future is uncertain, investors would like to dispose of. As a result, market price will go down. Like recently you have experienced, most of the share prices in India or abroad are showing declining. So market capitalization will also decline and a stock index will also decline. If share prices of ABC are up, then market capitalization, which was 10, it is now 11 and 110%. So index will be 110. Understanding free float market capitalization method, which is prevailing nowadays in India, computation of NIFTY and SENSEX is based on floating market capitalization method. Floating market means total number of shares which are issued by any firm. We have not to consider all the shares. We have to consider only those shares which are available to general public where trading is going on. Sometimes government has shares, but government is not trading. Government is keeping it. Founders or director shares, FDI, they are not trading. And certain number of shares which are available to general public, they keep on buying and selling. So we have to consider those shares which are available to general public where trading is going on. Take this example. Suppose there are two stocks, X and Y. Issued shares 10,000 for X and 5,000 for Y. Market price 150. So market capitalization will be issued stocks minus into market price, that is 10 lakh and 2,50,000 for Y. Calculation of free float market. Out of 10,000 stocks which were issued by X Limited, 5,000 are 5,000 shares are available for trading in open market. So only 5,000 will be considered and remaining 5,000 are not traded. So 5,000 into 100, market capitalization will be 5 lakh. And in case of company Y, 5,000 shares were issued. Out of this, 2,000 shares are kept by the promoters and remaining 5,000 are free float shares. I think this one is missing. Only 2,000 available for trading, and that's why 2,000 will be multiplied by 50. So 1 lakh will be the market cap. And the share price of 150 will be compared with the next day. And next day price may be upward and price may be downward. So accordingly, it will be multiplied by 5,000 and 2,000 respectively. And market capitalization will also be accordingly. So now you need to understand the importance of a stock market index. It is one of the standard to make comparison. If you want to judge the performance of individual investor, if you want to check the performance of different industries, so on the basis of market index, you can compare whether IT sector has given more return or pharma sector has given more return or construction business has given more return. And you can make comparison with the stock market index of India and China, which economy has performed better in a particular period of time. You can make comparison. You can evaluate alternative investments. If a stock market is giving more return than gold, real estate, or properties, or dollar, then you may go for it. Recently, I have seen due to poor performance of a stock market, most of the investors have started parking their fund into gold and dollar. To predict market movements on the basis of chart, on the basis of movements, you may use these charts for making prediction. These are some of the limitations of stock index. These benchmark stocks are selected on sample basis. So sampling has its own limitations. So all the errors of sampling will definitely be in case of stock indexes which are representing the economic performance of the country. So if there is sampling error or non-sampling error, so such kind of errors will also be in case of stock index. So these may not show you true and fair picture of the Indian economy or the performance of Indian economy. Formula error, there are number of methods of index number. If you apply each and every method, you will find different values. So same case with stock index. A stock may be replaced if not perform. Like we have seen Yes Bank, we have seen Satyam Computers. These were replaced. DLF, once it was part of benchmark stock, later on it was dealing. So these stocks keep on changing. So they may not give you true and fair picture. And stock market performance is based on financial statements of the companies, and financial statements again subject to some limitations. So all the limitations of financial statements will also be reflecting in stock indexes. Again, sometimes actual performance is good, but due to speculation, due to a lot of speculative activities, sometimes only parking of the fund performance is normal, but all of a sudden a lot of investment has been done. So that parking of the fund will give all of a sudden will give improvement in the stock indexes. Sometimes market is normal, but outside investors have started withdrawing the fund. As a result, herd mentality, people are following mutual fund industries have also started withdrawing the fund. Individual investors have also started withdrawing the fund. As a result, market will crash, may not show you the real picture of the country. A lot of scams are there. We do not know, nobody knows what's going on in different companies. All of a sudden we come to know. So these may not show you the true performance of the country. These are the things which I have discussed, and this is the end. And thank you so much for listening me.